What's going on, guys? Welcome back to another video. Today we're going to be looking at BNGO stock. This was a stock traded yesterday and we're going to take a look at it. So if you haven't already seen BNGO, this was a penny stock yesterday, then ended up picking up kind of midday, going on a crazy run, and I think it had somewhere around 30 stock volatility halts. If you're not familiar, basically when a stock gets halted, it's usually due to an extreme amount of volatility and or buying or selling that comes into the stock at any given moment throughout the day. And if there's too much buying, too much selling, too much volatility, it will get halted. And really, the idea of the halt is to try to slow down the volatility to protect traders. Essentially, that is why we have volatility halts, is there's just so much volatility, so much buying, that they really try to halt the stock to slow it down to, so to speak, help investors and kind of protect them, which can really go both ways in terms of protecting them, and I'll show you what I mean by that. So we're going to take a look at just a few of the halts. I'm going to explain kind of what goes on during a halt, and then show you one of my go-to trades when stocks do things like BNGO. So what we're going to do here is I'm going to put on, I traded it 2 times yesterday. One was kind of like accidental. So let's do this. So this one trade here was kind of accidentally clicked the button and bought 100 shares that I didn't really mean to buy, and then I just simply sold them. But anyways, you can see it goes on this monster rip, okay? And so if you're not familiar with what a stock halt is, pretty much any time you see these little gaps in the chart, usually a stock has been halted. Not all the time when you see a gap in the chart has it been halted, but you'll know if a stock's been halted if you're watching it, because what's going to happen is the stock price will move up or down, depends on which way it gets halted. So moves up or down, and eventually it stops moving. The candle stops moving, and you'll still be seeing orders going through on the level 2 or a time in sales, and the candle's not moving. So it raises this question. You'd be looking at it and the candle stops moving, but you still see a bunch of orders going through. So you're like, well, why is it doing that? And that's because it is soon to get halted. It hasn't currently been halted, but it's about to be halted, and the trading will stop. And all trading action on the stock will completely stop until it resumes. Most of the volatility halts that you see will last about 5 minutes, maybe 10 minutes. I'm going to do another video after this one on BNGO. I can't do it for a couple days, but we're going to go back in the on-demand feature on Thinkorswim, and I'm actually going to show you what it looked like during that trading day when it was getting all these halts. But I can't do it yet because the Thinkorswim platform hasn't updated far enough, and so you can only use that if it's, anyways, you get the point. So in a couple days, I'll have another video out on BNGO so you guys can see a little bit more detail on what I'm talking about with these halts. So what is the go-to trade that I like on some of these halts? Now, it only works occasionally depending on the setup, but normally when we have a stock going a really big run and it's just kind of just scorching to the upside, and maybe it's getting halted a couple times, but it really ramps up to the upside, you get a lot of people buying in here, and then eventually it tops out. And when you have a bunch of halts going on the way up, people are pretty much just FOMO or emotionally buying up the hype. So just keep buying up, thinking it might essentially run forever. And as soon as we start to get one pullback, everybody panics, and then they all start to sell at the same time. So then we get a volatility halt to the downside because everyone's now trying to panic sell before they know it's going to crash, right? Everybody knows if a stock goes running up really fast and it gets halted multiple times up, then it's most likely going to come down really hard and get halted on the way down. All right. So what you have to understand is naturally stocks like to fill gaps. So each one of these gaps, a stock likes to fill it. It's very common to see a gap get filled, right? But more oftentimes when we talk about gaps in charts getting filled, we're usually looking like at a daily chart or maybe a 4-hour chart. Very little do I see many people talk about intraday 1-minute chart gap fills. I do because I notice them all the time. I trade on 1-minute charts quite frequently. So when we're looking at this chart, you're going to see here's a gap, and maybe I'll circle them all. So, right, we have a gap here, gap there, gap here, little gap, right? Then we have a gap on the downside, And then we have a gap here on the downside. So a lot of times the 1 minute charts do a really good job at filling it. So each one of these gaps to the upside got filled as the stock crashed down. Price action came back down, filled all those gaps. And then you can see price action came back up and filled this gap. So not all the time will they get filled, but I can tell you right now, this is a go-to trade for me. Whenever there's a stock that gets really hyped up and then it kind of comes crashing down and it goes through a series of halts, right? Kind of comes down once, maybe gets halted once, maybe stops again, gets halted again, right? So we break down, halt, big gap, opens up, crashes again, halt. Right here is getting really close to some support. So I figured it's time to get in. So this is a go-to trade for me. After a stock runs up, comes crashing down on halts, and these don't happen very often. But when they do, they usually work really well. So anyways, it gets halted on the way down, and then you have this gap here, right? So dip buy in anticipation that this gap will get filled. So you can see I got long at about 324, really wanted to get long, obviously as low as I could, but by the time I pulled the trigger, it was 324, only got filled 600 shares, and then it pushes all the way up, fills the gap, and you can see I sell my position. Really, I wanted to sell at 363, that was a gap fill, but I got them out at 354, a little 10 cents off. But either way, you can see that there. So pay attention to this. And next time you see a stock just going crazy to the upside, okay, and it gets halted coming down multiple times, there's a good chance that when it stops crashing, it's going to bounce and it will normally fill at least the first gap here that it makes, normally. All right, so there's usually a good predictable trade there. All right, so again, every time you see a stock run like crazy and then come crashing down and it gaps down when it halts, you'll usually have a pretty good bounce trade to fill at least the first gap. And it also depends on how many times it halts on the way down, right? So right here we had this one halt, good chance it's going to get filled, but you also have to use common sense, right? So if we're talking about gaps getting filled and normally they fill, you might ask the question, well, Connor, why didn't the top gap up here get filled? Well, come on, guys, you got to think logically. If we were just at 470 up here and the stock just came crashing down, what is the likelihood that it's going to come bounce all the way back up to the highs without some sort of pullback in between, right, or anything? Not likely. But if the stock came crashing from 470 all the way down to 3, what's the likelihood it bounces and at least fills the first gap up to 360? Pretty likely. But for it to bounce all the way back up to fill the first gap up here, that's just not likely, because you got to think, if it came from 470 all the way down, what's the likelihood it goes all the way right back up? There was a reason it came crashing down. It would have to have a significant reason to make it go all the way back up and just forget about the whole crash that just happened, right? So again, you do have to think logically about it sometimes, but that is one of the go-to plays for me there. Trade ended up resulting in about $180 profit. So in a couple days' time, I will have another video out here on BNGO, which is going to be in regards to this exact day, and then we'll be able to go through, walk through, and kind of show you what's happening as the stock is getting halted. Not necessarily is it going to make you an ultimately great trader, but it's going to give you a little bit more information and help you guys understand when a stock is going to get halted even before it gets halted, right? So you don't have to worry about looking at the news feed to find out that it was halted, because you'll know that it's going to get halted before it even gets halted, right? And then I'll explain what will happen if you try to take a trade during the halt, etc., etc. So I hope you guys liked the video, and I hope you learned something new. And as always, thank you guys for tuning in. Make sure to hit the thumbs up button, share it if you need. Other than that, I'll see you guys in the next video. Everybody, take care.